Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So we came in today, futures are down 8 handles after yesterday's outside reversal, sparked perhaps by the escalation in tensions with North Korea and with President Trump saying there's going to be fire and fury. And granted, the market was a little bit complacent, and lo and behold, you had yesterday's outside day lead into a down open. So the question was, will we open down, stay down, and start to accelerate, or open down and kind of contain the downside for now? Okay, well, today we opened up near the 21-day moving average, which we discussed in the Morning Call Express and in my note, and we wound up holding that, and then literally just, I guess, kind of grinded up the rest of the day. So damage somewhat contained. Does that mean the sell-off is over? No, but does that mean you could short anything? No. A lot of guys who were pressing today definitely got a little frustrated. But the strong stocks that were on my go-to list that I talked about in the morning note, I did put my morning note on my Twitter feed so you could look at it. That goes out every day at 8:30. You could see 20, 25 different ideas that you could look at and create your own idea and your own trade that could generate some good cash flow for you. But anyway, a lot of those names did go positive. Some of the things that we were targeting worked and some didn't. Anyway, you look here at the chart of the S&P cash. All in all, after every headline and newspaper around the world talked about nuclear war with North Korea, this is all the S&P did. Came in, went as low as 24.62, which was support that we've had here for almost a month. Came off it, and doesn't mean you're out of the woods, but it's still kind of in this range. It's now a little bit looser and wider. Okay, now you have a high here of 24.90, so to the low. That was like a 30-handle move, so maybe you needed some time to come off that, and we'll see what happens here tomorrow. All in all, the trend is still to the upside, and you have to be a bit more careful, I think, with a little less positions. But all in all, this was a bottom tail off of that low. Pretty impressive for the S&P. Not every sector did that. The Qs did the same thing. The Qs came in. What did it do? Held the 21-day. Why was the 21-day important? Look how many other times it held the 21-day. So the question was it going to come into the 21-day, hold here, not rally and break, or come off of it and reclaim the prior day's low and give you a bottom end of an upper range? And that's what it kind of did. Was it a trap? Are we going to be down 20 handles tomorrow? I don't know. But for today, if you bought the down open, it was better than selling it. Same way yesterday. If you sold the strength on the reversal, it was better than buying it. And that trade creates a little bit of a choppy trade. So let's see. The Qs have been strong since this double bottom and taking out this descending channel, and it's still above the 21-day. I'm not going to get into the other sectors because they're not all in play. The Russell was weaker. Banks kind of held in there. The bios, what did the bios do today? Bios, here was your reversal up here, and basically have come in. They almost hit the prior support here. So we talked about if it hit the 50-day, it would be worthy of buying it close to 310. Where did it get to? 311, not quite. Still below the moving averages. So still, maybe you buy weakness, sell strength until it gets back above the moving average, which they were above since here. So kind of more neutral to negative versus neutral to positive for now, but coming into support, it's better to buy than to sell, or at least to watch it. High beta tech, the names that I put in my stronger side that could go green, from the note was Apple, Facebook, NVDA, BABA, and Baidu. Those are the 5 stocks, and Tesla that I said, hey, look at these levels, maybe buy it versus this or buy it versus a 15-minute low, so at least you have your risk to find, and those stocks did pretty well. Apple was the first one I went after, and I'm actually long Apple overnight. So far, no big pullback here. Here is where you had your gap up after earnings, cleared this spot, pretty much held it. Very impressive. Do we gap up tomorrow? I don't know. All I know is that, with the buyback over the summer and the launch expected to be in September, it's still looking pretty good. It didn't have a pre-earnings run. Just broke above the channel, and seems like, people finding safety in Apple. Tesla talked about if it could, hold this area, which it did. And, look at that, going sideways. This looks like maybe it goes sideways and continues. There's some news after the close about a driverless truck. Thought maybe if things got crazy, we can get down to here, and it didn't. Held in there, and that looks like it's still constructive. NVIDIA, also on the go-to list, said, hey, maybe it was at 174 yesterday. Earnings are on Thursday. If people are still short, maybe they want to cover. Well, here it held the level and took back yesterday's low of 168.71 and closed real strong, and still looks like it's hanging in there above the 8, above the 21-day. Earnings are Thursday, so we shall see. I had a good, this is a kind of good, little lesson. Okay, I had NVDA made really good money on it, and then right around 11:30, I thought maybe when positive was hanging there, I bought a lot for a push, and it just didn't work. And then at that point, it looked as if we could roll over. So I'm like, I'm going to get out of NVIDIA. I'm going to go to the gym like I do every day at lunchtime. So if you look here at NVIDIA, just to show you how specific you have to be or not, basically, so let's get rid of this thing. So here was, the opening move, okay, came in, tested that support, and then this is when I got long, okay, right around here for a nice trade. And then I think right here is when I bought a lot, thinking, hey, it's going to go, it's hanging in here, bull flag, and then it started coming in. I'm like, oh, I just ruined a good trade. Let me just get out of it. So I get out of it because, and if I would have just bought it here, had not too many shares, I would have said, hey, we can go green, we can hold it into tomorrow. And then, all of a sudden I wound up going to the gym because that's what I do at lunchtime. And then the next time it got up to this level, okay, it actually came up, went through it, and gave you another $1. So if this would have happened, this move here would have been a great, great extra trade. But instead, it took more time, made a higher low versus this spot, so it was still good, and then took this out. And this was one of the few moves that I missed by being at the gym at lunchtime. But you know what? It is what it is. I have my sanity, and that's what you have to have in order to have longevity. Facebook, you could have bought in the hole also. It took more time than some of the other things, but basically, out of the names, Facebook's still hanging out. To me, I'm a little careful because it does have a high valuation, and it's not it's just it acts great. So I just want to talk about it like that. It had a pre-earnings run, so it's just a little extended. Thank goodness Netflix was weaker, so no one really had it into that Disney news. But remember we said how it could be a better buy than a sell on the open, and it didn't quite get there, but it made a 5, 15, 30-minute low and came off that. So some of you guys say, hey, Red Dog, what's a 5-minute, 15-minute, 30-minute low, and what does verse that mean? It means in the first 5, 15, 30 minutes, some of these stocks put a low in, okay, down $4, $5, $6, and then that's your point of reference. And if you're not long and say, hey, I want to give it a chance, in the hole, let me buy it, put my stop at that 5 or 15 or 30-minute low, then you just put the stop in and let it go. And if you did that with Netflix today, you had a good trade. Sometimes you try it versus a 5-minute low and it breaks it, so you get out of the way, lose a little. Then later, there's a 30-minute low, which is after 30 minutes of trading versus 5. It's usually more important, but and then from lower, you try it again, and then maybe that time it works. Lots of times, though, you try it at the 5-minute low, doesn't work. The 15-minute low doesn't work. You're like, all right, I hate this stock. Puts in a 30-minute low, and then does what you want it to do for the rest of the day, but you were too tired to go back to it. So that's what I mean. Sometimes it's a 5, a 15, a 30. Sometimes a 60-minute low. Once you have the 60-minute low, there's an hour of trading established, and then that's a stronger point of reference. So just trying to teach you a little bit of the language. But all in all, some decent trading. Yesterday you had a great way to buy the breakout in the S&P and a lot of the stocks and sell strength and then get out of the way when those areas were lost. If you went home flat, today you had, with the plan, a way to buy some of these things in the hole, verse levels, verse a 5, 15, 30-minute low. And today, if you want to be flat and just take your cash flow, fine. If you want to hold a few things, either long or short, the risk is that you're wrong, but the reward is that your idea continues to work out. And and if it's an idea you like and you don't want to miss, you have to have a little bit of it. And that's it. Hopefully you had a good day. I'll see you tomorrow. Tomorrow is Thursday, and it's August. It's beautiful out. Go out, have some dinner outside, enjoy yourself because it's August. Refuel, refresh those batteries because September will be here before you know it. Bye-bye.